Hello everyone, welcome back to another daily market review. Today's date is August 22nd. It's a Thursday. We had a trending day to the downside. Um, Pretty clean price action if you were on side with the market directionally. Um, so let's walk through what happened. So I'm gonna skip the overnight session because I covered it already in the live stream. So I'm just gonna focus on the New York session instead. So here's the New York session right before market opened. We got a 830 low wick, 830 high wick. Price went up to the 830 high first, made another high there, and displaced lower. Took the 830 low, but 830 low, thought it would reject it and go for a more buy side. It didn't. Instead, it displaced. This is the first fair value gap below 830, which was used, and it went down to the sell side. Here is a little bit of choppy price action. I think that the reason for that price action was to form a bearish SMT divergence, if I'm not mistaken. Let's take a look at it. Oh, I need to clean. Yes. Oh, also, I forgot to mention there is a bearish SMT was formed. Um, at the highs before the reversal. Let me clean the chart here, delete that. Equal highs was taken now. All right, cool. Here, let's see, there is no SMT divergence, but the way I see that is basically price just manipulating higher, retracing up to the this range here, premium, and sells off. That's a manipulation basically. It manipulated, displaced lower one more time, formed fair value gaps there. This is the one. This is another one right there, a small one, which was also rejected, and it went down. Here's a trend. Like anything before this leg here, I think it's not as clean as this one. So in this leg, it distributed lower, right? The idea of that delivery was here. So first of all, there's this clean lows. That was the first target, and the second target, these clean lows here, which was tagged in that leg I just mentioned. Come on. All right. So why this low though? Here's why. On the 4-hourly, we have the PO3 on the 4-hourly, and this is the 4-hourly low. This is the 4-hourly sell side. That's why that low. That's why I'm marking out that low. So here on the 4-hourly, it looks better. Buy side was taken out. It rejected. No body candle close above, which means it's a turtle soup because it was a rejection there with an SMT. There is a rate candle here on the 4-hourly on ES. You look at the opposite side, which is the 4-hourly low right here. You can also take this one, but they're clean. I mean, equal lows, relatively equal lows on the 4-hourly. That's why that low. All right, so it took that low. Now it formed a new range from the high before the drop all the way down to the low. Now there is this premium portion of the market here. Okay, premium, not a fair value gap though. That's the premium portion of this leg right here. How do I know it's going to go up to that premium area? The way I know is basically this is another trade if you want to trade the pullback. So that's why I was taken out here, displaced above. This is the displacement, and it also formed an OB, which was respected. This initiates the buy model, and the objective of the buy model is to reprice the market to the premium, offer a fair value, and keep going in the direction of the drawn liquidity. So here, this leg, the way I see this is basically sell side was taken, displaced towards the buy side, initiated the pullback or the buy model over time frame, first fair value gap retest along with OBM breaker, delivered to the range EQ. There is also bullish SMT divergence here, and up here in the premium, let me delete that. it accumulated, formed rather clean highs, which will be targeted later on. So keep that high on your charts. So this is accumulation, became a trap in premium. This is the trap fair value gap, which was used at range EQ. As you can see, that's the last touch, and it repriced down to the range sell side liquidity here. Let's delete all that. Let's delete this. Repriced down there, and it displaced again. So that's a very large candle. Now here's the thing. With that large candle, if it's really bearish after taking the sell side, it should not completely fill that candle, that fair value gap. Why? Because there is a thick price action right here. Because of this thick price action, that fair value gap overlaps, and because of that, it should not completely fill that fair value gap. And as you guys can see, it rejected off the CE of that fair value gap. Okay, if it completely filled up that fair value gap, I would have looked for buy side delivery above here at that time. All right, so it offered fair value, displaced lower one more time. Here the same deal, swept the sell side, no displacement for initially, displacement here, which means market is in pullback. Now where is it going to pull back? Now you have the new dealing range from this high all the way down to the low. Same deal as here. Retest of the fair value gap, delivered the premium. Now this one is a trickier smart money reversal. There's no SMT. There's no, it's just basically a rejection. So buy side is running out, and once the buy side is taken out, a displaces. Because of that, it becomes a smart money reversal, just like what happened at the top today here. Pretty similar deal, and same deal as here. Okay, so it comes up all the way up to the range EQ one last time, which is the order block and the fair value gap, and delivered sell side through the market close. I mean, also, if you want to turtle soup this kind of PA, you can also look at the old fair value gaps, which is this one, which was delivered algorithmically. So you can turtle soup that as well. Once the damages mohawks are done towards the upside, outside the fair value gap, the old one here, then you can turtle soup it if you wish. But for me, the smartest entry is right here if you want to. This is another accumulation, forms a trap. That's a new trap. This is the trap fair value gap, and it delivered sell side through the close. Now at the close, it did some damage to the sell side. That went up to the clean highs here, which is the dealing range EQ again, right here. On the last 10 minutes, it repriced towards the sell side. That's how you read the last 10 minutes. So basically, you wait for one side to get taken out, whether that would be sell side or the buy side, then you fade that move. Okay, if you wish to trade it. I am not encouraging it, but sometimes it offers great what do you say, great reward. When you see equals though on both sides, don't trade it. Okay, I mean it is you can trade it, but don't trade it. It's not as good. So here it delivered buy side more after taking the sell side here, and that's because ES has had equal highs here, which was taken out right now. So going into tomorrow, not sure what to expect anymore. Hold on, let me delete it. Let me delete all that so I can cover what we could get tomorrow on Friday. Delete that, delete that. Okay. So on tomorrow, on Friday, this is what I'm thinking. Let me go to the 4 hourly. We have clean lows on the 4 hourly. I think we could get down there tomorrow, and that'll wrap up the whole week. So what I would do personally is I would wait for a market maker sell model, take that sell model. Here's the first TP and the second TP. The first TP is the short-term sell side, and the second TP is the equal lows right there, and I would personally call it a week after that. But definitely don't look for buy side delivery tomorrow, because I mean, look at the scandal, 367.68 points on the 4-hourly. It's not gonna get faded right away. It could go for the range EQ. I doubt it though, because it needs to sweep the sell side one more time, in my opinion, before making a rally or before pulling back. So annotate 525 and the short-term low here, which is at 542, and try to find a lower time frame style model targeting those lows. Okay. Hope you guys find this insightful. Hope you had a beautiful day. I'll talk to you guys tomorrow. Until then, see ya.